Good morning, everyone. Just a quick update on the markets. It's Sunday. It's very sunny here. I won't have a lot of time to write a blog today, so I thought maybe I could do like a 15-20 minute stream, see how the market is doing. And yeah, if you have any questions, just let me know and we can check it out. So, firstly, as you can see, markets have been ripping from as low as 6,300 to now 7,100, which is one of the fastest recoveries in the S&P 500. It's actually the second fastest second fastest recovery in the market. Sorry, my daughter is screaming. Schatje, we gaan straks naar Otis na het eten. Ben even aan het streamen. Sorry about that. My girl is watching TV and she's asking when we're leaving. So to continue, the market, the S&P 500, had a 7-day streak with a positive gain. So I mentioned this in the chat. So only 10 times before, the market has gone up 7 straight days and gaining over 7%. And if you look more closely, looking at the 2-week change, it has a 100% probability of being positive. So you basically have to go to the time the S&P triggered this signal, and then 2 weeks forward, it will be above that price target. And the target, the signal was for September. 4 September was here at around 6,500. So once this signal got hit, we know that 2 weeks forward, it's not going to be lower than this level. So high probability. And so I remember I was buying a lot of my favorite stocks, which I cover every month, like Amazon, for example, Google, Meta, Microsoft. I have been buying all of these companies during the April dip, and also slightly selling some to take quick profits and get into cash again. But yeah, overall, reducing my average cost for my assets, that was the point. Just because we know that the cycle of the midterm year is usually a little bit more bearish going into November, October. So we're right at this point, somewhere in the uptrend from April to May. And after that point, it's very likely we're going to see some, sideways, hopefully not a lower low, but I do have around at least 15% cash in my portfolio to either trade or reserve for another big correction. Because in the midterm years, which we are right now, we usually see a lot of volatility and multiple 5% corrections. So we want to be prepared for that. The Nasdaq had the same signal. I think it was even a 11-day streak overall that was closed last Friday. So very bullish for the Nasdaq as well. We are seeing oversold levels, especially for small caps. So it's not going to stay like that for long. Usually when you see small caps going over stretched, it doesn't take long before it snaps back. So I'm more focused on mega caps, of course, but if you're into small caps, think about taking some profits, of course. So last week I said I was trimming some positions, not a lot, just like 1% of my overall portfolio, just to make sure I have cash for the next dip. The way I buy stocks is actually very simple. So I calculate the intrinsic value, and once the price goes below the intrinsic value, I look at some strong support levels where I think the market might stall. So I have some predefined levels. So for Google, that would be around 300. So when it hits there, um, the point is to buy when it hits my buy level. Something I've been doing for Nvidia, for example, hitting my first buy level here. Something I did for Amazon during a big crash. I did delete some of the buy levels for charting something, but you get the picture. Mastercard the same. As long as it goes lower, I will be buying, and buying at my buy levels. So there's a few stocks I just like, and I would never um, get out completely, just because they're so strong in fundamentals. So that's for stocks. Now my outlook, of course, for the S&P 500 is that yes, we do are a little bit overstretched in the short term, so you can expect some volatility as we head into the end of the bullish phase of this cycle. But overall, I I would say I don't think we will see this level broken again. Maybe like a revisit, a retest, but after this sharp recovery, I don't think it's very likely. So my goal would be every dip in the S&P 500 would be a gift, and I would still be a buyer because I do think the market will end green for the year. It is a midterm year, which is usually a volatile year, but we had 2022 being very volatile, and it was red. And then we also had 2018 being a red year for the markets, and it has never happened before that we had two uh, or three midterm years consecutively red, each after the other one. So yeah, my overall um, assumption is that the market will be green at the end of the year. Now let's look a little bit at crypto. I was looking at the 76 level, 76K level for a test of support again after breaking out. Currently, Bitcoin is below it. We'll see how the Sunday weekly close will end. So it will be an important one for us to tell how it goes. I would prefer that Bitcoin can close above this candle from March, which is at around 76K. Because closing below it, that's basically taking out a swing low and a clear reversal sign. So um, that will be a bad sign if it stays below this level. It's probably going back to 65K, trading within this range. Because I posted about it yesterday for paid subscribers. Looking at the cycle view, we're still in the bear market from a 4-year cycle. Um, I asked my followers, like, do you think we're still in a 4-year cycle? Many think that ETFs have changed the game. I think it's just a part of it, and the 4-year cycle remains intact until proven otherwise. So the more likely path is that yes, we could head higher maybe in the short term, hit that 85K level, but eventually make a lower high here and trend lower into the ending phase of the bear market, which is somewhere October, September 2026. So I'm also holding some cash for buying crypto at that time frame. So that's it for today. Just wanted to give you my quick update on how I think about the markets. I don't see any questions. So anyway, thanks for watching, and I'll see you next time. Bye.